What's going on? Blake here. As always, none of this is financial advice. Trade and invest your own risk. This video is designed to help you get prepared for this week's trading and also explain to you how I'm approaching this market. Entertainment purposes only. Let's get into it. So we have the S&P pulled up here on a daily time frame, and we are still in a no trend market. And as you guys know, in no trends and downtrends, we treat them exactly the same. And our priority is always preservation of capital. And if you have them year-to-date gains, we've really only had one good uptrend this year, and that was this one back here at the middle of March. So this uptrend paid really nicely. We had two others that were very short-lived. And yeah, it's very difficult swing trading. This is one of the most difficult trading environments that I've ever been in. I've been trading for over a decade. And yeah, this is really the first time that I've experienced a potential prolonged bear market. So I don't think that this is the bottom. I think the higher time frames, the weekly and the monthly, indicate that we do want to go and retest these eventually. But can we, get a pop, up to this 50-day and fill some of these gaps? Absolutely. So a couple things I want to highlight here. So on Friday, we did close inside the cloud above the 10 SMA, which is a no trend. And if we close above, we'll call it Thursday's high, Wednesday's high, excuse me, then we would be in an uptrend. So we would go into an uptrend if we get back above, roughly the 380, 225 area. And what would I be looking in that scenario? So if we get above this candle's high, what would I be looking for? Well, I'd be looking for a test of this candle's high, which was the 28th. So if we get above the 28th, then I think you can start talking about, getting some long market exposure and, maybe playing a break up to this 50-day and maybe even, back to this 410 to 415 range on the SPY. So that's what the bulls want to see. So if you're bullish, that's what you want to see. You want to see us get above this candle's high, the 29th high, and then make a run for this high. And if we get above that, then you can get long with some confidence because we do have some gaps above here to fill. So what will I be looking for if we do go into this and we fail at this and we start to roll back over? So if we go into a short-term uptrend, but we can never get back above this candle's high, and we start to roll back over and break trend again, then we can start talking about a very high odds conviction short play. So maybe I'll take a swing short position if that happens. But one thing's for sure is if we do get below this January 30 low, Thursday's low, that's not what you want to see if you're a bull. If we close below Thursday's low, then I think it's almost inevitable that we come down and test this and go lower. So if you're a bull, you want to see this hold. If you're a bear, if we come up here, you want to see us fail here and roll back over or break below this candle's low and head lower. So there's some scenarios there. We have to stay open-minded. We're in no trend, so anything's possible. But the higher time frames, the weekly, the monthly, suggest lower. How long this will last, who knows? You got people like Dr. Barry that, from the Big Short that are, calling 2,000 on SPX, which is pretty wild. Don't know if we'll see that. We could. We need to stay open-minded to it. And as always, in no trends and downtrends, it doesn't matter. We're going to trade the methodology, and the methodology is preserve your capital. Wait for uptrend and wait for higher trend or higher odds trades. So this is what we're looking at. All right. We can get into an uptrend above Wednesday's high. So above this candle's high, we can get into an uptrend, maybe play it for a shot up to here. Very, very important level. If we fail up here, if we get up there and roll back over, that's a very high odds short. If we close above this candle's high, I think we definitely probably come and fill this gap and maybe a move higher. But like I said, all uptrends are going to be contained uptrends because we're still below a declining 50 and a declining 200-day moving average. So, and you can see this 200-day is all the way back up here at 438. So until we're back above this 200-day moving average and we have a 50-day moving average that's moving higher, it's going to be difficult for me to have any real conviction in any uptrends until we can get back above this area. Above this area, then we're talking about very high odds, long, swing long trades. Below, the uptrends are going to be contained until they're not. All right, so just manage your expectations if we go into an uptrend. Understand we're in a bear market and, odds favor lower prices. So that's how I'm playing this week. Not a whole lot to do in between this range. This is gonna chop people up. I think above we see a nice move, out of this range, maybe to come fill this gap to the 401 area, and below this, I think it's inevitable that we probably head lower. So I wouldn't be trading too much in here. If you are trading, you can always use 5-minute RT. It's been really successful lately. We'll just take a look at the 5-minute chart on the SPY. So Friday came in, gap down, moved lower, had a 5-minute RT long, paid, and that was your day, right? You didn't really need to do much more. So with that, I do want to talk a little bit about crypto. Bitcoin is still looking very ugly, right? Bitcoin does not look great. We talked about this 30,000 area. I think, above 22,000, you could see a move up to 25,000 if you're a technical trader and you're aggressive. I mean, you could take that trade. But until this, starts to put in more of a bottom, I don't feel very confident getting swing long Bitcoin. But like I've said in the past, if your time horizon is anything over 3 years, I think you're fine dollar cost averaging at these levels. One thing I want to make sure that everybody realizes that nobody has to be a hero and pick a bottom. Everybody wants that trophy to say, "Oh, I bought the bottom." That's a battle that is not worth trying to win. Much easier to trade trend and add when the market conditions tell you to add. So don't try to be a hero. If you're investing in dollar cost averaging, that's one thing. But if you're trading, don't just be picking bottoms. Similar story with Ethereum. Very obviously similar chart setup. Crypto in general, I'm very bullish on long term, but we're in a bear market, so we got to respect that. Real quick, I want to talk about the NASDAQ. The NASDAQ is showing relative weakness. So if we're looking to go short, take a look at some of the tech names, especially chips. So semiconductors look really weak. And we'll just wrap it up real quick with the S&P. I want to bring up this weekly time frame. This is ugly, right? Still at a declining 10, declining 50 week moving average. Okay, this is a bear market. This can continue to melt lower, and it can have nice rips up into this area just to move back lower. So until we start to really formulate a bottom and see some price patterns and some momentum and some uptrends, I don't have very high expectations for this market, and I still think we're just at the beginning of what could be a prolonged bear market. So prepare for that mentally, emotionally, financially, right? Prepare for that. If that doesn't happen, you were prepared for it, and you're better off because you were prepared and ready to attack on the next uptrend when we have odds in our favor. All right, that's how I'm going to be playing it this week. I'll see you guys in the open. Hope you've enjoyed your holiday weekend.